Imagine two businesses paying for the exact same insurance policy on the same day. One records it as an asset, the other records it as an expense. Surprisingly, both can still end up with the same financial statements. That's what makes this topic so important. Many beginners think they must memorize two different sets of journal entries. In reality, the key is understanding the logic behind the entries. By the end of this video, you'll know why both methods exist, when they're used, and why they always lead to the same final result after adjustments are made. Before comparing the two methods, let's quickly refresh what a prepaid expense actually is. A prepaid expense is a payment made in advance for goods or services that will be used or consumed in a future accounting period. There would be a prepaid expense when a business pays for something before receiving all of its benefits. For example, if a company pays 1 year of insurance today, the cash leaves immediately, but the protection lasts for the next 12 months. That means only a small portion has been used today. The rest is still a future benefit, so it qualifies as an asset until time passes. This idea is the foundation of today's lesson because both methods are simply different ways of handling that future benefit. In simple words, cash is paid now, benefit comes later. Now let's compare the asset method and expense method at a high level. The biggest difference is how the payment is recorded at the beginning. Under the asset method, the payment starts as an asset because it represents a future benefit. Under the expense method, the payment starts as an expense. Later, an adjusting entry is made to make sure the balances reflect the amount that has actually been used and the amount that still provides future benefits. For the asset method, you will transfer to expense. For the expense method, you'll transfer to asset. Although the journal entries are different, both methods end with the same balances. That's the main takeaway from today's lesson. As we go through the example, keep this phrase in mind. Different beginning, same ending. Let's use the same example from the previous video for the comparison. On January 31, Alex Consulting Business pays $1,200 for a 12-month insurance policy beginning February 1. Since the asset method is what we've been using, let's try it first using this method. We know that none of the insurance has been used yet. Hence, the entire payment represents a future benefit. So our initial entry using the asset method is debit prepaid insurance and credit cash. Now let's see what happens in the T accounts. Notice that prepaid insurance has a debit balance of $1,200, while insurance expense still has a balance of $0 because no insurance has been used yet. From this point on, I won't show the cash T account because today's focus is on how the balances in prepaid insurance and insurance expense change under each method. Now let's move to the end of February. 1 month has passed. Since the policy lasts for 12 months, 1 month's insurance cost $100. We record an adjusting entry by debiting insurance expense for $100 and crediting prepaid insurance for $100. Watch what happens to the balances. Prepaid insurance decreases from $1,200 to $1,100, while insurance expense increases from $0 to $100. Those are the balances we want after 1 month of coverage. Now let's record the exact same transaction using the expense method. This time, the entire $1,200 payment is initially recorded as insurance expense. Looking at the T account, you can see that insurance expense starts with a balance of $1,200 while prepaid insurance has no balance. By the end of February, we know only 1 month of insurance has actually been used. That means only $100 should remain as insurance expense. The remaining $1,100 still represents future insurance coverage. To correct this, we debit prepaid insurance for $1,100 and credit insurance expense for $1,100. Now look at the updated T accounts. Insurance expense has an ending balance of $100 and prepaid insurance has an ending balance of $1,100. Those are exactly the same balances we reach under the asset method. Now that we've gone through both methods, let's compare the ending balances side by side. Under the asset method, the ending balance in prepaid insurance is 1,100 and insurance expense is 100. Under the expense method, the ending balances are exactly the same. Even though the journal entries look different, both methods produced identical balances after the adjusting entry. This is why both methods are accepted in accounting. The important thing isn't how you started. It's that the balances are correct at the end of the accounting period. Whenever you're studying these methods, focus on the ending balances rather than trying to memorize every journal entry. So that wraps up today's lesson on the asset method and expense method for prepaid expenses. Before you go, here's one question for you. A business pays 6 months' rent in advance. Under the expense method, which account is debited first? Rent expense, cash, prepaid rent, or unearned revenue? Leave your answer in the comments. In the next lesson, we'll move on to unearned revenue, which is the opposite of prepaid expenses.